Hey there, welcome. Today, we're diving into something that surprises most people when they first hear about it. The fact that you can use retirement funds you've already saved to explore alternative assets like real estate, promissory notes, precious metals, even cryptocurrency. Oh my gosh, and so much more. I'm talking about funds sitting in your 401k from a previous employer, that traditional IRA you opened years ago, or that Roth IRA that's just been sitting there. Those funds, money you've already saved, can be repositioned to give you access to alternative asset opportunities. Let me explain how this works. First, let's talk about what a self-directed IRA actually is. Self-directed individual retirement account, or IRA, provides the opportunity to diversify your portfolio by exploring a variety of options beyond typical stocks and bonds. It's still an IRA. It gets the same tax advantages as traditional or Roth IRAs, but it offers a much broader range of options. With a traditional IRA at most custodians, you're limited to stocks, bonds, mutual funds, maybe some ETFs. If you have one at a bank, you probably have a CD. That's about it. Your choices are made from a menu that the custodian provides. With a self-directed IRA, you have control. You can choose alternative assets such as real estate properties, promissory notes, private placements, private company stocks, precious metals like gold and silver, even cryptocurrency. The key word here is self-directed. You're directing where the funds go. You're making decisions based on what you know and understand. Now, here's what most people miss. You don't need money to open a self-directed IRA and start exploring alternative assets. The retirement funds you already have sitting in accounts from previous employers or at traditional custodians, those funds can be moved into a self-directed IRA through what's called a transfer or a rollover. Let me break down the difference. Transfers move funds from one IRA custodian to another. Let's say you have a traditional IRA at Bank A, and you want to move those funds to a self-directed IRA at Mountain West IRA. That's a transfer. It's a trustee to trustee transaction, meaning the money never touches your hands. There's no limit to how many IRA to IRA transfers you can do in a year. And when done correctly, there are no taxes or penalties. Rollovers. Rollovers typically involve moving funds from an employer-sponsored retirement plan, like a 401k, 403b, or 457 plan, or even a pension or an annuity, into an IRA. When you leave an employer, you can roll over your employer funds into a self-directed IRA. You have 60 days to complete the rollover to avoid taxes and penalties. If you take personal possession, you can also do a direct rollover, which means they send it directly to your account here. There are some limits on IRA to IRA rollovers. You can only do one per 12-month period, but rollovers from employer plans don't count against that limit. Both methods allow you to reposition existing retirement savings without needing fresh contributions. You're not starting from zero. You're using funds you've already accumulated. So, why does this matter? Because most people think they need a lot of new money to get started with alternative assets. They think, oh, I need to save up $50,000 or $100,000 before I can buy real estate in my IRA. But if you have a 401k from a job you left 3 years ago with $75,000 in it, you already have that money. If you have a traditional IRA with $150,000 sitting at a traditional custodian earning 3 or 4% in a money market fund, you already have those funds you need. The question isn't whether you have enough money. The question is whether your money is in the right structure to explore the opportunities you want to explore. A self-directed IRA may be that structure. So let's talk about what you can actually do with self-directed IRA. We'll keep this pretty high level. Real estate. Everybody goes to real estate first. This is one of the most popular options. Your self-directed IRA can purchase rental properties, commercial buildings, raw land, or even participate in real estate syndications or funds. Your IRA owns the property. All rental income flows back into the IRA. All expenses, property taxes, maintenance, insurance, are paid from the IRA. You're building equity and cash flow inside your retirement account. Promissory notes. If you have experience in lending or understand credit evaluation, your self-directed IRA can hold promissory notes. Essentially, your IRA makes a loan to a borrower secured by real estate or other collateral. The borrower makes interest payments, and those payments return to your IRA. When the note matures, the principal comes back to your IRA. You're applying your lending expertise to your retirement planning. Okay, how about private placements or private stock? Do you have experience evaluating businesses or investing in syndications or funds? Your self-directed IRA can invest in private companies, businesses that aren't publicly traded. This could be purchasing shares in a startup, participating in a private placement offering, or buying into a small business you've researched. The key is you have knowledge and expertise to evaluate the opportunity. Precious metals. That's pretty popular right now. Your self-directed IRA can hold IRS-compliant gold, silver, platinum, or palladium. We're talking about physical metals, not ETFs or mining stocks. The metals must meet specific purity standards and be stored with an approved depository or custodian. This gives you a tangible asset inside your retirement account. And the other end of the spectrum, cryptocurrency. It's a digital asset. Digital assets like Bitcoin and Ethereum can be held within a self-directed IRA structure. This allows you to explore cryptocurrency while maintaining the tax advantages of a retirement account. Your gains can grow tax-deferred in a traditional or tax-free in a Roth IRA. So, how do you actually do this? What's the process? How do you move existing retirement funds into a self-directed IRA? It's actually simpler than you might think. First step, open a self-directed IRA account. You need to partner with an administrator that specializes in alternative assets. Not every custodian offers self-directed IRAs. Mountain West IRA specializes in this space. We understand the unique requirements of alternative assets. Step 2, complete the transfer or rollover paperwork. Remember, if you're moving funds from an IRA, you'll complete a transfer form. If you're moving funds from a 401k or other employer plan, you'll complete a rollover form. Mountain West IRA helps with this paperwork and coordinates with your current custodian or plan administrator. Step 3, waiting for the funds to arrive. Now, this can vary quite a bit depending on who your current custodian is, but typically it takes 1 to 4 weeks for IRA transfers and 2 to 6 weeks for 401k rollovers, depending on how quickly your current plan administrator processes things. Some are faster, some are slower. Step 4, once the funds arrive and clear, they're available. You can now direct those funds towards alternative assets. If you want to purchase a rental property, you can start looking. If you want to hold precious metals, you can coordinate that purchase. You're in control. Now, self-directed IRAs provide great flexibility, but there are important IRS rules you need to understand. Prohibited transactions. We've done a couple videos on these. You cannot use IRA-owned assets for personal benefit. If your IRA owns a rental property, you can't live in it, vacation there, or use it for any kind of personal purpose. You can't hire yourself to manage it. You can't buy furniture for it and take it home. All activity must be arm's length and for the benefit of the IRA. And then disqualified persons. The IRS prohibits transactions between your IRA and certain people called disqualified persons. We do have a complete video on that if you're interested. This includes you, your spouse, your parents, your children, their spouses, and certain fiduciaries. Your IRA can't buy a property from your dad. Your IRA can't sell a property to your daughter. These transactions are prohibited. Remember, all activity must flow through the IRA. Any income from IRA-owned assets must flow back into the IRA. Any expenses must be paid from the IRA. You can't personally pay the property tax on a rental property your IRA owns. The IRA must pay it. You can't pocket rental income. It must go into the IRA. UBIT, unrelated business income tax, or UBIT. It's hard to say. In certain situations, like operating an active business or using leverage, borrowing money, to purchase real estate, your IRA may trigger something called UBIT. This is a tax on business income earned inside the IRA. It doesn't disqualify the IRA, but it's something to be aware of. Mountain West IRA provides education on these rules. We help you understand what's allowed and what's not, but we don't provide legal or tax advice. We always recommend consulting with qualified professionals in the area that you're looking at. So, what does Mountain West IRA actually do? We provide education and administrative services. We don't have securities licenses. We don't have financial advisors on staff. We don't give advice about which assets to choose or what opportunities to pursue. Our role is to process transactions, maintain records, provide educational resources about self-directed IRAs like this, handle IRS reporting requirements, very important, offer guidance on administrative procedures and rules, and help you understand what's possible with a self-directed IRA. But you are in control. You make the decisions about which assets to explore. You choose opportunities based on your knowledge and expertise. We believe in empowering you with knowledge. We want you to make informed decisions about your retirement future. So let's talk about some real examples because it's always good to see what other people have done. Let me share a few examples of how people are using existing retirement funds. Sarah's real estate portfolio is kind of impressive. She had $175,000 in a 401k from a previous employer. She rolled those funds into a self-directed IRA at Mountain West IRA, and she used $150,000 to purchase a rental property in a growing neighborhood she'd researched. The remaining $25,000 stayed in cash for repairs and holding costs. Monthly rental income flows back into her IRA. She's building equity in an asset she understands, and she has cash flow. Robert's promissory note. Robert had $80,000 in a traditional IRA at a bank. He transferred those funds to a self-directed IRA. With his background in real estate lending, he uses his IRA to hold promissory notes secured by investment properties. He earns 8 to 12% interest that returns to his IRA. He's applying his professional expertise to his retirement planning, which is pretty smart. Jennifer likes precious metals. She transferred $60,000 from her Roth to a Mountain West IRA Roth and directed the purchase of IRS-approved gold and silver coins. She wanted diversification beyond paper assets and believes in holding physical metals. Her IRA now owns tangible assets that she feels provides stability. These are just examples. Everyone's situation is different. The point is that existing retirement funds can be repositioned to explore alternative opportunities. So here's the bottom line. If you have existing retirement funds, a 401k from a previous employer, a traditional IRA, a Roth IRA, a pension, an annuity, those funds can give you access to alternative asset opportunities. You don't need to start from scratch. You don't need to wait years to save enough money. You may already have everything you need. The question is whether those funds are in the right structure to explore the opportunities you want to explore. A self-directed IRA can provide that structure. It gives you control. It offers a much broader range of options. It allows you to make decisions where you have expertise. If you want to learn more, visit mountainwestira.com. We have free educational resources, articles, and information about self-directed IRAs and alternative asset. Your existing retirement funds are waiting. The question is, are you ready to understand your options? Thanks for watching. And as always, remember to like and share, subscribe if you want to see more, and be sure to go ahead and leave a comment if you have any additional questions or if there is something specific you would like to see us cover. Thank you so much. You have a great day. Bye.